In this video, we're going to continue our discussion of financial statements. In this case, we're going to take a much closer look at the balance sheet, right? Let's think about this document. This document tells us all the things that we have purchased in this company to operate the business. It also shows us where we received the financing to purchase those things. So we're going to go through the process here of looking at this statement in a little bit more detail. So what does it show us? It's a snapshot. It's a point in time, right? It breaks down our line items, the things that it talks about. It breaks it down into what I refer to as kind of the left and the right. The left-hand side of the balance sheet shows us all the things that I've purchased. The right-hand side shows us where we got the money to pay for them. Some of our financing is short-term, some of our debt is long-term, and certainly our investors are investing for the long term. So again, this is just the basic balance sheet. We want to talk about something they'll refer to as a classified balance sheet. We want to see a little bit more detail. So what are our current assets? By definition, they are things that we have purchased that we expect to convert to cash or use them up within 1 year or the operating cycle, whichever one is longer. Most of the time, our operating cycles are typically fairly short. A month, maybe a quarter of a year. So typically, it's either 1 year or something less than that. Rarely would it be something more than a year. So the operating cycle, again, that's just the time it takes to go through the cycle from buying inventory to selling inventory. There's basic types: cash, investments. These are short-term investments, receivables, inventories, and what they refer to as prepaid expenses. So if we look at this company, we have what they refer to as cash and cash equivalents, right? Cash and things that look like cash. Short-term investments. Now, sometimes balance sheets will combine these so that it is cash and marketable securities in one line item. Accounts receivable, inventories, and then prepaid expenses and other types of current asset. When we talk a little bit more about purchasing things, we'll talk about buying things and trying to match the expenses of those things, trying to match them up with the revenues from that period. So we'll buy things. For instance, we buy, today we pay for our car insurance, but I pay for 6 months. Well, this month, I need to show the expense of car insurance for this month, and the remainder, right, the rest of that insurance bill, I really haven't expensed it yet. I haven't used it yet. So that line item, that is really an asset. It's something that's mine. I'm going to use it in the future, but it's something called a prepaid expense. This goes through what we'll and eventually we'll define these things as something called the accrual process. Long-term investments are things like stocks. Plant and equipment could be in here, but sometimes they talk about this is land or buildings, but we're not using them for operations, right? It's just buildings and things that we owned that we're not using in the business itself. Plant, property, and equipment hopefully are pretty well defined, right? We're currently using these things. We have a system of accounting called depreciation. Depreciation, as I mentioned a little bit earlier, allows us to match the expenses of the month to the revenues of the month. Well, we bought a building, and that building is going to last for 20 years. We need to write off 1/20th of that asset's value this year. So we match that expense with the revenue that we made this year. And that's accounted for, obviously, through the process of depreciation. And here we can obviously see what? Flight equipment, 3.9 million. And already of this money, we have written off 17 or 1.7 million. So that tells us we have roughly $2.2 million left in value of those assets. And this is not value like market value. This is what we refer to as book value. And again, more on some of this terminology as we go through these videos. There are also things called intangible assets, patents, trademarks, goodwill, right? These things, you can't touch them. They're not real in the sense that they're not material, right? But they provide value to the company. And here we have, again, a series of different types of line items, right? Now, some of these will actually be written off, much like depreciation is written off. What about the right-hand side of the balance sheet now? Current liabilities. These are things that we expect to pay within the next year or operating cycle, which is ever more. And again, a lot of these, as you see, they're referred to as payables, right? Salaries and wages payable, interest payable, income taxes payable. These are really accrual or adjusting kinds of entries. Accounts payable and notes payable are loans that we have, that we owe people money. There are also some other kinds of things here. Say we borrow money for 5 years. Every year, 1/5 of that loan comes due. So the current liabilities also include current maturities of long-term obligations. And again, here we can see a listing of current liabilities. Again, this is for Google. What about long-term liabilities? We have things like bonds, notes payable, other kinds of things like deferred taxes. These, again, obligations, but they're written off in a way that we're not going to have to pay them for a while. What about stockholder equity? There are two primary items here. Common stock. These are investments that shareholders have made into the business, right? When the company was started and they bought stock, that's where this number comes from. Every time the company issues stock, that amount is added to common stock. Now, I've talked about retained earnings in previous videos. This is profit that's been retained for use in the business. I don't like the word retained. This is money that's already been reinvested into assets, right? We've already used that for the left-hand side of the balance sheet. So here's a classified balance sheet we can see for Franklin Corporation. And you see we have subtotals. Total current assets, 22 grand. Long-term investments, 7,200. Plant and equipment, 29,000. We have some intangible things. So we have a total of $61,400 in total assets. Now, how did we get these assets? $16,050 came from current liabilities. Notes payable and accounts payable, right? Those are the two real tangible things, tangible loans. So about 13,000 of that we actually owe and going to have to pay that out. Again, we'll talk about accruals in the next couple of videos. Long-term liabilities, we have a total of 27,350, or excuse me, 11,300. When you add the short-term debt and the long-term debt, we end up with total liabilities of 27,350. Here's our common stock and retained earnings. Total of 34,050, and we add the two together, we end up with our total liabilities and stockholder equity has to balance with our total assets, $61,400. So we have purchased $61,400 worth of assets. How did we pay for that? 16,000 came from short-term loans. 11,300 came from long-term loans, and 34,050 came from shareholder investment. That's the end of this video. We'll talk about some more analysis in our next video when we talk about ratios. How do we look at this data? What do we do with it? I'll see you soon.